Welcome back to Investing Talk Podcast.
Today we're looking at Strive, ticker ASST. It's definitely one of the more volatile names out there right now. And the big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis of Strive, because, this company is really not the same beast it was even, say, 12 months ago.
Right. It's changed quite a bit.
Yeah, Strive is one of those cases where they fundamentally shifted their identity, their whole strategy, very, very recently.
Okay, so founded back in 2022, but what we're really looking at now is post-merger, right?
Exactly. The crucial event was that big $1.3 billion merger. That closed in September 2025. And it basically consolidated everything under this AST ticker.
And it wasn't just putting companies together, was it?
It was more philosophical.
Totally. It was an entire pivot. They really changed their core mission. And that pivot is, well, that's the whole story now, isn't it? They came right out and said they're becoming a public Bitcoin treasury company.
Right. And also an investment manager, but laser focused on Bitcoin accumulation. Bitcoin.
So they're trying to do both. Hold Bitcoin on their own books and manage it for others.
That's the plan. The Bitcoin treasury part means, their own balance sheet is directly tied to Bitcoin's ups and downs. They hold it themselves. It's like a proxy.
Okay, so not just earning fees from managing client money, which you might expect.
Well, they want those fees too, but the treasury aspect adds this whole other layer of direct crypto exposure. It's ambitious.
And they signaled they're serious. I saw they brought in new leadership.
Yeah, big move. They added Ben Workman as Chief Investment Officer. That was in October 2025. His whole job basically is to make this Bitcoin vision happen.
So it really feels like a make or break moment, an inflection point, you could say.
Absolutely. Forget whatever Strive was doing before. Now everything hinges on executing this Bitcoin strategy. Can they pull it off? Can they attract serious assets under management, AUM? And, obviously.
Depends on the price of Bitcoin itself.
Of course. Huge dependency there.
Okay, it's a compelling story, definitely high stakes, but let's ground ourselves in the numbers for a second. What do the actual financials look like right now? Because that often tells a different story.
It really does. And it's pretty stark. Let's start with revenue. Looking back over the last 12 months, the TTM revenue, only $4.95 million.
$4.95 million. That sounds tiny.
Yeah.
Especially for the kind of ambitions they're talking about.
It is incredibly small.
Yeah.
And then you stack that up against profitability or lack thereof.
Uh-oh. How bad is it?
Well, the net loss for the same period was negative $23.54 million.
Wait, loss of over $23 million on revenue under $5 million?
Yep. The loss is almost 5 times the revenue. That just screams, very early stage, pre-profitability. The basic unit economics just aren't sustainable right now.
So they're burning through cash.
A lot of cash. For every dollar they make, they might be spending like $5 just keeping the lights on, funding the merger integration, maybe buying those first Bitcoin assets. They constantly need more capital.
Okay, now compare that to the stock price. Because the market cap,
Yeah.
huge, right? Last I checked, it was over $900 million.
It is. $916.32 million market cap. Now, you put that huge number next to the tiny revenue.
What does that do to the price-to-sales ratio? It must be insane.
It is. You do the math. That tiny revenue, massive market cap. It implies a price-to-sales ratio, PS, of roughly 185 times. 185, yes.
That's astronomical. Even for tech growth stocks in a bubble, you rarely saw anything near that.
Exactly. Peak sauce darlings maybe hit 30 times sales, briefly. 185 tells you the market is pricing in decades of cheap growth or assuming they'll suddenly have a massive Bitcoin hoard. It's pure speculation on the future.
Right. It's valuing the idea and the Bitcoin link, not the current business reality.
Precisely. No established financial performance supports this valuation. It's all about potential Bitcoin appreciation and future growth.
Okay, so fundamentally, it's priced for absolute perfection, a huge speculative bet. Does the stock chart, the technicals, reflect that kind of wild ride? What about volatility?
Oh, absolutely. The chart is basically a picture of chaos. The volatility is extreme. Just look at the 52-week range.
Okay.
The low was about 33 cents, 0.335 cents. The high, 13.42
$16 from 33 cents. That's nuts.
It shows unbelievable swings, no stability, and the recent volatility, just looking at the last 30 days, is super high at 49.17%. Huge moves either way are totally possible any day.
So super volatile, weak fundamentals. What's the trend? Is momentum holding up at all after the merger buzz?
No. Quite the opposite, actually. The technical picture right now is pretty bearish, meaning the stock is trading way below its key moving averages. That signals sustained selling pressure, not buying interest.
How far below?
Significantly. It's trading about 57% below the 200-day average, and even worse, 61% below the shorter-term 50-day average.
Wow. So any recent excitement seems to have fizzled out completely in terms of the trend.
Yeah, the immediate trend is clearly down. Doesn't matter what the Reddit forums are saying. The overall technical summary from, the data sources we use, it's giving a moderate sell signal.
Okay, a moderate sell. And what about Wall Street analysts? Are they seeing a turnaround soon? What are the price targets looking like?
They're not helping the bull case either, unfortunately. Near-term forecasts, decidedly bearish. They line up with the technicals.
And the average target price?
The consensus 12-month average price target is sitting at just 0.8021 values, 80 cents.
80 cents. But it's trading around, what, $1.33 right now?
Exactly. So that target implies nearly 40% downside risk from where the stock is today.
40% downside. Okay, that's a huge red flag for pretty much any investor profile. This isn't buy and hold territory.
Definitely not. It feels much more like a trade, and one where you need a very clear exit plan going in.
Still, despite all these warnings, fundamentals, technicals, analyst targets. We did see that crazy pop recently, that nearly 30% jump in one day back in October.
We did. That was pure narrative driving the price. The merger news, maybe some broader crypto enthusiasm.
Yeah.
It definitely got the retail crowd excited for a bit.
But that excitement ran into some headwinds pretty quickly, didn't it? There were a couple of big cautionary news items recently. Let's talk about the regulatory stuff first.
Yeah. That's always a risk in crypto-related ventures. In early November, the stock dropped hard. There were these rumors, unconfirmed, mind you, about potential regulatory scrutiny.
Scrutiny over what, specifically?
Things like their asset management practices, maybe the accounting around the merger. Again, just rumors, but...
But in a stock like this, rumors are enough to cause damage.
Absolutely.
Yeah.
That uncertainty alone knocked the stock down 11% in a single day. It shows just how fragile the confidence is. Any hints of regulatory trouble sends people running for the exits, especially since institutions are probably wary.
Okay, so regulatory overhang is one risk. What's the second major flag from recent news? Something about dilution.
Ah, yes. This one is huge. Potentially the biggest financial risk hanging over the stock right now for shareholders. Back on October 10th, they filed a prospectus.
Oh, okay. What did it cover?
It covered the potential registration of over 1.28 billion shares.
1.28 billion. How does that compare to the current number of shares out there?
Well, depending on the exact structure and current float, that's potentially enough shares to double the amount available for trading, maybe more.
Double the float. So if they actually sell those shares to raise money, which, given the losses you mentioned, seems likely.
Exactly. If they do a secondary offering, which they probably need to fund operations, every existing share suddenly represents a much smaller piece of the company. Instant, massive dilution.
Your shares become worth significantly less overnight, basically.
That's the risk. This filing signals they have the ability and likely the need to raise cash, which will almost certainly put downward pressure on the stock price, regardless of what Bitcoin is doing.
Okay. So, summarizing where we are today. Massive valuation risk, weak financials, heavy losses, bearish technicals, regulatory clouds, and this huge dilution overhang. It sounds pretty bleak.
It does paint a cautious picture based on current data.
But the whole point of the pivot is the future, right?
Sure.
If this is all about executing the Bitcoin strategy, there must be a key moment coming up where we get some real answers.
There is. All the analysis points to one absolutely critical date in the very near future, November 14th, 2025.
November 14th, what happens then?
That's their Q3 earnings report.
Why is this particular earnings report so much more important than usual?
Because it's the first one since the merger closed and since they really declared this new Bitcoin identity.
Yeah.
It's the first chance for them to show actual hard numbers.
What kind of numbers are crucial?
We absolutely need to see their actual Bitcoin holdings. How much do they have on the balance sheet? We need them to disclose their assets under management, the AUM. How much money are people trusting them to manage? And what kind of fee revenue is that generating?
And proof the merger is actually working.
Yes. They need to show some real integration benefits, maybe cost savings. If they come out on November 14th and can't show solid progress on Bitcoin holdings, AUM growth, or fee revenue, Well, the whole speculative story kind of falls apart.
Okay, so November 14th is the big financial reality check. Are there other, maybe more market-driven things happening soon that could move the needle? Index changes, institutional buying?
Good point. Beyond earnings, there are a couple of structural things to watch. First, you got ETF index rebalancing. That's usually around December 20th.
How does that affect Strive?
Well, will it get added to any crypto-focused ETFs or indices? That would create forced buying. Or will its volatility or small size get it kicked out of anything? That would be a big negative signal.
Okay. And the other catalyst?
Institutional holdings. The big funds have to disclose their holdings periodically, usually around January 10th for the previous quarter.
So we find out if the smart money is actually buying.
Pretty much. Did any major mutual funds or hedge funds start a position after the merger? If yes, that could signal broader confidence. If not, it confirms they're staying away, likely due to the risks we've discussed.
And, with a stock this wild, you always have to consider the rumor mill and social media chatter, right?
Oh, definitely. You can't ignore it in a name like this. There's already chatter, maybe wishful thinking, about them announcing a huge Bitcoin purchase before the earnings report to juice the narrative.
Which could cause a short-term spike.
For sure. And then there's always the short squeeze potential. If there's enough short interest and the online crowd gets excited, you could see a coordinated buying frenzy. But that's pure gambling, not investing.
Okay, let's try to wrap this up. The fundamental conflict seems clear. You have this massive speculation, this potentially exciting crypto asset management story.
A story priced for absolute perfection.
Right. Versus the reality of really weak financials, huge losses, dilution risk, the 40% analyst downside, that crazy 185 times sales multiple.
So putting it all together, the overall rating from the source material, based purely on the data, it's a 3.5 out of 10.
3.5. Ouch.
Yeah. The data just doesn't back up a bullish case right now, especially not for near-term gains or long-term stability at this price. It's priced like success is already baked in.
So if the data is that negative, who should even consider this stock right now? Is it suitable for anyone?
It's tough to recommend broadly. For short-term traders, the volatility is high, yes, but the technicals are screaming downside risk right now. It looks more like a potential short setup than a buy.
And for long-term investors?
For long-term, your entire bet rests on those three big ifs.
Yeah.
Bitcoin price has to keep going up substantially. They have to attract massive AUM really fast, and they have to somehow figure out how to actually make money, achieve profitability.
And until that November 14th earnings report gives us concrete proof they're moving in the right direction on those things.
Until we see the actual Bitcoin holdings, the actual AUM growth, the actual fee revenue, the risk versus reward just looks really skewed to the downside right now. You're paying a huge premium for what is still just a promise.
Caution is definitely the word.
Absolutely.
The whole story of Strive hinges entirely on that earnings report. Before November 14th, you're investing solely on the speculative promise of Bitcoin holdings and AUM growth, not established financial performance. That's a gamble, not an investment.